do at the time. You don't just want to be putting them on any bit of price action. Like a tight channel like this, what does this tell you? It's so steep it's going to be broken by the slightest bit of retracement. There's no reason to put a channel on this. It's useless. Just put the upward trend line, or if it's down, the downward sloping trend line. But I see a lot of traders do this. I see a lot of traders in a channel. They'll be doing this. They'll be putting trend lines on little movements like this. Right? They'll be doing this and doing that. Like, dude, what are you doing? This is not even worth doing. You're completely wasting your time here. Alright guys, welcome back, welcome back. This is going to be a video about the market cycle. As you can see, it is written up here, market cycle. Alright, this is really going to help you figure out your locations when you trade, okay? Because there's going to be different things that you expect to see in different cycles in the market. Alright, and I want you to think of this as a cycle, but I also want you to think of it as it's not just, like if you think of like the water cycle, everything happens in the water cycle, leads to the next thing, which leads to the next thing, which leads to the next thing, and then you start the cycle all over again, okay? This kind of like that, but it can change, okay? So you typically can get a spike to start a strong trend. A spike looks like this. The spike is more like this. Okay, spiking up, very little pullbacks. There's a video on my channel about the spike phase. I haven't done the other ones yet, but you want to pause this and go look at that one. Spikes look like that, okay? They're very fast. They have a lot of conviction. There's no pullbacks, okay? They believe there's urgency to buy. You know there's urgency to buy because they don't let price pull back. As soon as this bar closed, boom, they start buying again. They buy from open to close. They buy from open to close. That's a spike phase. It's very strong. And when you see this on your chart, when you recognize it about right here, okay, you want to just be a buyer. You just want to mark it in and be a buyer. Where does your stop go? It's got to go below the spike because this is the reason for you buying. The spike is the reason for you buying. So you can't put your stop anywhere but below this spike, no matter where you buy. Okay? So the problem is, as it goes higher and higher, people realize if it gets here and they see a spike, they realize, oh my God, I'm going to have to put my stop down here because this is where I know I'm wrong. And they don't want to do that. But chances are this spike is going to continue. Okay? Because it's showing you conviction. It's showing you momentum. Okay? So that's the spike phase. All right? After the spike phase, let's go down here. Okay, after the spike phase, what typically happens is you start to get a tight channel. So once you get your first pullback in the spike phase, once you get your first real pullback, okay, whether it takes out the low of a candle or whether it's just consecutive bars but they're small, you are no longer in the spike phase. All right? You are now in the channel phase, the tight channel phase, okay? And what will usually happen is you'll get these spikes. Hold on. All right. Didn't want you to have to watch me do all that. So you'll get this spike, okay, and then you'll transition into a tight channel. How do you know you're in a tight channel right here? Well, you know you're in a tight channel because there's pullbacks. There's pullbacks, but they don't go very far, okay? So whereas here, you made your money buying on stops, buying the closes of the bars, that's a stop order, which turns into a market order. You either bought on stops or at the market here, right? And you were successful. Here, if you try to do that, you're going to have to be careful because there's going to be pullbacks now. And every time you buy on a stop at the top, you're going to get a pullback. Buy on a stop, pullback. Buy on a stop, pullback. Buy on a stop, pullback. It's going to be very frustrating if you're trying to just buy on stops. However, if you bought on limits, okay, if you bought on limits, which is buying at the bottom of bars, wanting a retracement, you bought on a limit here, you got filled. Okay, you bought on a limit here, you got filled. You bought on a limit here, this bar, you got filled. You bought on a limit here, you got filled. You bought on a limit here, you got filled. Okay, so that's how you would trade this kind of price action right here. So let's look at how they look different right here. Make these black. Okay, so this is a spike. Look at the slope. Then it starts to channel up. It starts to turn into a channel. You hear that term spike and channel? That's what this means. Spike and channel. Okay? This is the channel up. And you can put a channel around a spike also, guys, but it's not going to help you much. Okay? You want to put channels around price action to give you boundaries and give you an idea of what the market can do at the time. You don't just want to be putting them on any bit of price action. Like a tight channel like this, what does this tell you? It's so steep it's going to be broken by the slightest bit of retracement. There's no reason to put a channel on this. It's useless. Just put the upward trend line, or if it's down, the downward sloping trend line. But I see a lot of traders do this. I see a lot of traders in a channel. They'll be doing this. They'll be putting trend lines on little movements like this. Right? They'll be doing this and doing that. Like, dude, what are you doing? This is not even worth doing. You're completely wasting your time here. A better way to do this would be to take a box. Once you see the moves start to come in, take a box and look at this retracement here. Okay? Measure that retracement and then put it at the top of another move so that you can gauge the retracement. But that's for another video. It's something I've been working on with people in my Discord, trying to show them that. Okay, so spike and channel. Okay? You know it's a channel about right here. You can make the channel trend line and the trend channel line. Then what happens is you get a transition into one of these two things, okay? It becomes a broad channel, okay? Or a trading range. Now let me show you what a broad channel looks like. All right, so this is what a broad channel looks like, okay? And you've seen price do this before. So you're channeling up, tight channel, and then you get a breakout, retest, picks up again. But then what does it do? Comes all the way back down, breaks the channel line here. Okay, you've seen this before. You've seen this manipulation before. Comes all the way down, breaks the channel line here, stops here, maybe at a low, at a swing low or something like that, right? Maybe this is the swing low that it breaks, okay? And then you start to get a channel, okay? You know it's a channel. Let's say for right now it looks like a downtrend. So you got a little bit of a triangle in here, okay? But you know it's a channel about right here, and you can put a channel on it, all right? And then what happens? So what's important about this part is that in this section of price action, you can make money going long or short, okay? Because there's enough distance for you to sell here and make money down here. There's enough distance for you to buy here and make money on the way up, and then sell again and make money on the way down, and then buy here and make money on the way up, okay? There's a way for you to get involved here on both sides of the market and sell. That's a broad trading range, okay? And you can look and see more patterns here. You know, this is kind of a ascending triangle or whatever. So this would be more a broad channel. Let me show you what a trading range would look like after this. And it's pretty much the same thing. A broad channel is just a sloped trading range. So that's why you trade them the same. Okay? You want to buy high. You want to buy low and you want to sell high. Okay? In a trading range, you want to sell the top 1/3 and you want to buy the bottom 1/3 or whereabouts. Because the only thing that the market participants are sure about inside of a trading range is that price is not going to go much further. Okay, that's the only thing that they agree upon. All right, so you can get good at trading ranges right here. Okay, and this would be a break out of that range, retest. You know, all these patterns still work inside of this condition here. But you have to know that you're in a trading range, because you cannot be trading this the same way that you trade this, okay? What do you see interesting about this trading range? Do you see something that looks similar to this? You see this? This is a spike. This is also a spike. This is a spike. This is a spike, okay? This is a spike to the downside. So you will have spikes inside of the trading range, But that doesn't make it not a trading range. When you see this spike down here, okay, if you've just come from a tight bull channel that was preceded by a spike, you don't look to take this all the way back down here, okay? Because you anticipate that the people, the strong participants that bought this, they're going to be here every step of the way to fight you, okay? So you shouldn't be looking for shorts. You shouldn't be looking for shorts. You should be looking for longs. You should be looking to buy in these areas. This should be your buy zone, okay? But you only know to buy here and not take this as a short if you know what the market came from, what state the market came from. That's the only way that you know to buy there, okay? Because this looks like a spike, all right? But if you know that we just came from a spike, a true spike, then we channeled up, now we're entering a trading range. You're not, once you break through this, once you break up here, okay, this is being resumed. This is resumption of the trend, all right? But since this is an upward sloping channel, you tend to want them to break down 75% of the time. So this is 75%, this is 25%. So when this happens, you're surprised, but you go with it, and then it fails up here and comes back down. When it comes back down here, this is what you expect to happen here, okay? You expect to use this as an opportunity to get long, because every single pivot low on this chart, someone decided to step up and support the price. All right? So this can transition into a trading range, which would just take this and slope it. It would just take this price action here and slope it into a box. Okay, so instead of going up and getting into a ascending channel, you just go sideways. Breakouts will fail. Breakouts will fail. Typically go to the other end when they do. Okay, and then you'll witness something else, and either the spike phase will start over again, or you're going to enter another tight channel up. Okay, but if you've just come from a trading range, what's powerful about this, guys, is knowing the location. If you've just come from a tight trading range, okay, let's make it even tighter here. Okay, if you've just come from a tight trading range, okay, what's most likely going to happen next? Well, it could range forever and ever, right? It could stay in a range. Go look at the weekly chart of Zoom or PayPal or Spotify or Coin. Well, Coin's been off, but go look at weekly charts and you'll see that this can happen for a long time. This trading range can happen for a long time. But what happens when you leave the trading range? What is this? Okay, this is either going to be a tight channel up, okay, or it's not going to look like a channel at all. It's going to be a spike. It's going to be a spike up, and then it's going to start to channel, and then it's going to start to go sideways again. So if you're leaving a trading range, you're not looking to enter another trading range right away. You're looking for one of these other two things to happen. You're looking for there to be a spike out of the range and a channel, okay? Or you're looking for there to be a broad channel up, because it can do this too. You can come out of here and spike and broad channel up. And basically a broad channel is just a channel with less conviction. Okay, there's less conviction because there's a lot of two-sided trading. This is an expanding wedge, same thing. Okay, so I hope this video helped. This video got my understanding of this from the Al Brooks trading course. If you want to know more about this, I highly recommend that you buy his course. It talks about the phases, talks about the market cycle, and it's just a really excellent way I've found, and I've been trading now for 5 years. I've found it's a really excellent way to put the market into context, okay? Because if I'm looking at a spike, even if, here's the reason you buy the spike. You buy the spike because down below the spike, okay, that's where the liquidity is, okay? And the market participants that started this big move up, they don't want their orders to be stopped out, so they're going to support this move down, okay? This starts to take over here. This trading range starts to take over when the people from the spike start to take profits. Maybe their risk is getting too high up here. They've got a lot of open profits, so they start to take profits. This allows new people to join the trend. When you see that this is channeling up like this, people are taking profits, people are joining the trend. What's happening though? This part of the order book was ruled by stop participants. How do we know they're stop participants? Because they move price. Only stop orders and market orders move price, guys. When a stop order hits the market, when a stop order is triggered, it turns into a market order. Okay? So you know it's a market order, and you know that it's moving price because look at the spike. So you know that these are stop participants that are mainly in control here. What's happening here? Are stop participants in control here? Well, no, they will continue to move price. Now they're battling the other side, people taking profits and people that saw the spike and want to fade it. Now they have to change their tactics. They have to buy below bars now. These are limit bulls that are buying below the bars. They want to make money, they got to buy below the bars. They can buy up above, okay, but their stop has to be down here, okay? So the best way to do that is to just look and see who's making money and do what they're doing to make money. And you cannot be the same kind of bull here in this part of the trend as you can be in this part of the trend. Okay? So the main part of this is just to let you see how the market will change. This is the strongest part, no pullbacks. Then it gets a little bit weaker. Okay? Now it can go spike, channel, and spike again. Okay? But once again, if you're in this, you know what to expect next. You know that there can only be three things that are going to happen next. All right? And you use your patterns and you use your ability to read candles and volume, whatever else you use to trade. Use that to navigate these. Okay? But I'm not selling in this. I'm 100% not trying to sell here. After this, after I see 3 consecutive bull bars closing at their highs, I'm not selling this. You're crazy. Because what are the chances of it dropping below here for me to make a profit? They're small. Okay? If I see this up here, I'm not buying this up here. Why? Because it's come up here twice now and it can't get over it. It's channeling up, but not enough. I'm not buying new highs. But every time it comes down here, what happens? It's bought up. And that's taken up. All right? This broad channel right here, I might get caught up here. But if I'm using good risk management, where's my stop? Well, it's below this right here. So when it dips below here, comes back up to it, takes it out, comes back down and doesn't put in a low, well, now I can say, okay, I just came from a tight channel. I'm probably moving into a broad channel. How do we trade that? We trade it like we trade a trading range. We sell high and we buy low. Okay? As low as we can in the range. Because if it breaks the range, check this out. If it breaks the range, okay, what do you have then? Well, you've got another spike phase starting, but to the downside. All right? But you still got to be wary because this spike and this spike are now battling. The people that started this move, once they get up here and see it coming down, they're more inclined to buy the lower price gets. But this is such a strong move down that this move is strong enough to undo all of this price action. But that's another video. All right, if you guys want me to continue this, I'll go to the charts in the next one, and I'll show you markups of actual spike phases, actual market cycle playing out throughout the week, and show you how you could have traded it. Look at this beautiful spike down here. Okay, look at this trading range here. Look at this broad channel right here. Look. Get a little preview here if you're still watching. This broad channel right here. More like a triangle. Let me know if you want to see that video, guys. I will see you in the next one. Peace.